A little more than a week out from the launch of those spot Bitcoin ETFs, and despite the hype, price of Bitcoin has fallen about 11% since then. Our Deirdre Bosa on what that might mean for the future of those funds in today's Tech Check. Hey, Dee.
Hey, Carl. Good morning. The results so far, they're underwhelming. The price of Bitcoin itself has fallen to its lowest level since SEC approval, underperforming other asset classes like gold, bonds, and global equities. As for inflows, a little underwhelming here, too. Investors poured nearly $2 billion into the new ETFs in the first 3 days, and that falls short of aggressive estimates from market players that range from $3 billion on its first day alone to $55 billion over 5 years. Now, the early winners and losers, they're emerging too a week on. BlackRock and Fidelity are driving early consolidation with nearly 70% of all inflows. Grayscale, meanwhile, has seen more than $1.5 billion in outflows, perhaps further pressuring it to lower fees. Remember, it has the highest fees by far. Now, of course, it is still very early days, and the Bitcoin price rallied some 160% last year in the lead up to ETF approval. But history tells us that thematic ETFs, they usually launch at peak hype and peak price. The first futures Bitcoin ETF, which launched in October of 21, that topped $1 billion in assets in just 2 days. Those who bought in, though, they also got on near Bitcoin's peak when one Bitcoin was worth about $61,000. Now, that ETF fell 72% in its first year, and today is still down about 50% since that launch. We've seen similar action in buzzy thematic ETFs elsewhere, from cannabis to space to the SPAC funds of 2021. Investors, they pile into these popular ideas at their highs and frequently end up selling low. We could be seeing the same, at least in these early days for Bitcoin. There's another element to this, guys, maybe more philosophical. What if Bitcoin actually lost the bigger battle by winning over Wall Street, winning Wall Street's acceptance and the acceptance of some of its harshest critics? More Bitcoin that is held in funds, the less that is available for actual users. And its original case as a digital currency, putting that even farther away. Through ETFs, Bitcoin has now further solidified itself, of course, as a store of value. That's obvious, but not a means of exchange, what it was originally meant for. We covered this in our Tech Check Weekly Deep Dive, which you can find at cnbc.com/TC Weekly, with some of the best sound over the last week since that ETF was launched. But guys, sort of taken some of the intrigue maybe out of Bitcoin. It's now another asset class, which is really interesting for Wall Street. For the maximalists, maybe less so.